What's up, everyone? So as you know, the US stock market is getting very expensive. As you can see here, the dividend yield is 1.2%. So today I'm going to take you through and look at many different countries, the relative value of their stock markets, and the type of dividend that they're offering. So to continue here with the S&P first, let's look at our baseline basically. So here we have a price to earnings of 25, a price to book of 4.6, and like I said, that 1.2% dividend. So this isn't something I'm personally interested. I'm trying to find larger dividends that you can actually use to pay your bills, to retire on, whatever your needs may be. And with those lower PEs and higher dividends, you have a little bit less risk, in my opinion. In addition to the risks that you incur with what's going on with the US dollar at the moment, other currencies are, of course, having the same issues, but it's getting pretty extreme here in the US. So just to look at the technicals on the S&P before moving into these other stocks, this thing has taken a straight line up. It looks like we're losing momentum, although there's no telling where this may go. But as the Fed is talking about tightening, I'm not convinced they'll follow through with it. But the threat, even just the threat, is enough to make us lose some momentum here. So the first country I want to look at is the United Kingdom. The UK has a price to book of almost 2, so it's less than half of what we have in the US. Price to earnings 19, so a little lower than the 25 we have. And rather than that 1.2, we have a 3.15, so well over double the yield. You've got half the price to book. If you look at the UK technicals here, this isn't the best chart, but when I'm making decisions long term, like dividend paying stocks that I'm going to hold for years, I want the charts to be so obvious that I don't really have to look at different candlesticks and all these complicated things. I want it to be blatantly obvious. So with the UK, we're running up against resistance here. So the previous highs back here around 34. That's what we're sitting at here. You know, with this leg up, it's hard to say what could happen. But if we do break this resistance, this thing could continue. So again, hard to say, but also with the political news, the fact that they're saying they're ending lockdowns, we'll see how long that lasts. Maybe their plan is to re-implement them next winter, or who knows what they're going to do. But in the meantime, if they really are going to release all these mandates and lockdowns, their economy could do really, really well. So we'll have to watch this one politically in this case. But regardless, if you're putting your money in an S&P, one disclaimer, well, two disclaimers. Obviously, never make a trade based on anything I'm saying. This is just what I'm looking at here. That's it. So always seek professional consultation if that's what you want. But the other disclaimer, that this is BlackRock iShares. I also don't support iShares. I personally like to look at what the yields are and then go into the individual stocks and buy those. But I do believe in the power of ETFs. They make it way easier, but I personally do not support these iShares. I buy the individual stocks in the indices that I find the best value in. But that is up to you. I'm just bringing you this information. So moving on to South Korea, price to book of 1.26, so much lower here. PE of 17, but terrible dividend, 0.89, even less than in the US. So for me, this I'm losing interest right away here. Although there are interesting stocks within this index that could be worth looking at if you are so inclined. Technically, this thing is in a downtrend. So again, not the best place to buy when something is clearly dropping like this anyway. All right, Japan. So again, much lower price to book, 1.55. PE of 17, and similar dividend to what we see here in the US. So a little bit better value, similar dividend. The thing is with also if you're going to use these ETFs, these have a little bit higher cost associated with them than something like the Vanguard ETF. So that is also something to acknowledge. So keep that in mind. Japan, similar to Korea, it's in a little bit of a downtrend here. Looks like we just took a leg lower today, broke that previous support. So the downtrend continues here. China, this is an interesting one here. Again, pretty much many of these are going to have a lower price to book than we see here in the US. 1.89 PE of a little bit under 15 here, and similar dividend as we see in the US, a little bit lower even. But when I look at the chart, this thing has been tanking, and we're here near previous levels of support. So I'm just wondering, when is this thing going to turn around? At some point, I think technically this thing will have to make a reversal regardless of the value, just some type of retracement here, which could provide a trading opportunity. But if you're just looking for long-term dividend holds, this dividend is not very impressive. All right, Brazil. Now this is a little different here. So price to book 1.8, PE of 16, but look at this dividend, man, and look back, you could have had almost a 10% dividend a year ago, but now still not too bad, 6.93, so almost a 7% dividend. Much lower valuation than we see here in the US. And this thing's pulled back recently, so we had this perfect pattern coming out of the lockdowns here in 2020. We came up, pulled back, another leg higher, pulled back, another leg higher. Now we've really pulled back, so we've broken this trend, but at some point you have to ask yourself, if this thing was continuing higher with this perfect pattern, you would think you would have seen a retracement here, and we got a big move today, but we're still in a downtrend. But this thing, that looks like that's peaking up, so we'll have to see if this continues. But we could be seeing a reversal soon, just based on how long this pullback is compared to what we've seen before, and that high dividend, and the fact that tech stocks are really taking a hit right now. We could be seeing people rotating into value stocks and higher dividend stocks. Well, we not only could we are seeing that already, and we'll see if that continues. Russia's always very cheap. This is crazy. So price to book, fairly valued. I mean, who could imagine a price to book of 1? PE of 13.5, so not too bad. With the combination of this price to book and this dividend, 4.5, it's not as much as Brazil, but the price to book's a little lower. The valuations are a little bit lower here. So I find Russia as an interesting one. And Russia is the largest country by land mass. They're a commodity-based country, and the more everyone is printing, you know, they have oil, minerals, you name it, natural gas. So as these commodities go higher, Russia is in a great position here. They're buying gold, they have low debt. I mean, I hate to say it, but man, they don't have the tech that we have, but for the economy that they have, counter-cyclically, they're in a decent position here. And as far as the debt, they won't be forced to devalue their currency. They may do it by free will, but they won't be forced to. Right now, we've had a good pullback here, so to me, that's a buying opportunity. I don't know how long this thing can pull back. It's hard to say, But again, you're getting a price to book of 1, a decent dividend. And man, this thing took a hit. But previously we were in an uptrend, so at some point this has to turn around, just as the values go way out of proportion to many of the other markets we're seeing. Mexico, so price to book of 2.2, PE of 20. I don't understand why Brazil is so much cheaper than Mexico at this point, or at least the dividend is so much less, 1.66. There are a few companies. One I like to watch is Grupo Mexico. They own Southern Copper, and they also own a large rail fleet. Anyway, for example, so there are companies within Mexico, but overall the dividend's just not there for what I'm looking for here. And the chart looks like it's losing momentum again. We're up here near resistance. Dissimilar to the United Kingdom, where it looked like we could pop through this resistance. Here it looks like it's really having some trouble. You can see the momentum's really slowing. This thing pulled back. It's trying to pop up, but it looks like with today's action, you know, if this fails here, this could be the potential sign for either just a consolidation or a reversal. But regardless of the technicals, again, fundamentally, dividend's not there for what I'm looking for. Poland, okay. Price to book, decent, 1.36. PE 20. But again, pretty low dividend, 1.4. If I had to do anything, I would just buy the S&P over Poland. I mean, you're probably much safer with that. So not interested here. Chart doesn't look too bad. You know, is this a pullback or is this a reversal? Hard to say there. But again, for me, not worth looking much further. Colombia, so 1.34 price to book. A lot of these PEs are around 20. And a dividend of 1.8. Again, at this point, with the higher fees associated with an ETF like this, I would just buy the S&P at that point. I think there are some energy companies here that could be worth looking at if you want to drill down deeper. Technically, it looks decent, actually. I mean, just a slow grind. It's really consolidating. But overall, we're in an uptrend, so it's going too slow for me, though. I prefer to see clear uptrends, or just deep value and trying to find the bottom and just averaging down. India, now this is absurd to me. The price to book of 4 over 4, a PE of 34, and a dividend of 0.22. You have to be insane here. I guess it did have some value. I don't know why this is so overextended. It might be due to their internet companies, all of that, but this thing's gotten out of hand here. This thing, it's gone straight up, and here, is this a turn here? I mean, this is a deeper pullback than we've seen, and if you zoom in here, this thing got hit today, so it's really struggling to continue its upward momentum, and I can see why. Why would anyone buy this? I almost want to short this thing, but it's pretty dangerous after a run up like this. But I'm tempted to hedge my positions in something like Russia or Brazil with the lower valuation and short India in case I'm wrong, you know. So Canada here, price to book 2.4, PE of 18, 1.6% dividend. Again, that premium over the S&P, not enough to really make me want to pay the extra premiums for a Canada-specific ETF, and also the crap Canada's pulling. I don't even want my money near that commie. Well, anyway, I won't go there, but I wouldn't be investing in Canada right now, personally, unless maybe the oil, something like that, and the lumber. Yeah, but other than that, no. And it looks like the momentum is slowing on the chart. Almost looks like a head and shoulders here, like a left shoulder got a head, and we'll see what happens here. But clear change in momentum compared to what we were seeing here. So looks like limited upside after this huge run up. Australia, price to book 2.4, PE of 18. Better dividend, not too bad. You know, not the best, but it's better than what we've seen. So this may be due to some of the mining companies there. Well, actually, some of the banks, they have better dividends in many of the companies there. So obviously, that's reflected in this total dividend of 3.5. So personally, I would look at companies within this portfolio. I do own a few. Rio Tinto is one of them that's doing very well at the moment, but it's had a big run up, so getting risky to buy when it's ran up this quickly. But anyway, Rio Tinto, that's one I like for the dividend. But yeah, better value here, and we're in a downtrend, so I don't know that I would be in a hurry to buy here. I mean, we may get better prices. You may see, if this is going down, you may see above a 4% dividend. So this is something I'm watching, and again, Australia's got a little better dividends here than we have in the U.S. Germany, price to book of 2, PE of 21, and a dividend yield of 1.45. So again, really not worth the premium that you're going to get over an S&P, in my opinion. And we're in a downtrend, so probably not a good place to buy anyway here while this thing continues its way down. And with all the mandates and all the crap they're doing, again, that's probably hurting their economy. And if you're in Germany, let me know in the comments below. How is it? You know, the news says one thing, but it's different than a personal account. Hopefully it's not too bad for you guys, or as bad as it sounds. Price to book 1.5 here. In Singapore, price to earnings 21, 2.2%. Again, probably not worth it to me. Singapore has some decent companies, though, so I would see, you know, it's probably worth looking which of these companies here are paying decent dividends, and go ahead and see that way. I'm sure there's something interesting here. But as for the overall ETF, not that attractive, and we're in a downtrend, so. All right, the last one, Spain, 1.35 price to book, 19 PE, and a tiny dividend. So nothing interesting there. So in summary, basically the countries I'm looking at most are Brazil and Russia, due to their larger dividends from any of the other countries we've looked at here, and also the United Kingdom and Australia around 3.5. So definitely much higher than we have here in the US, and worth a look for me. So thank you all for watching, guys. If you've made it this far, consider subscribing, give me a like. Take care, and I will see you all in the next one.